It's December in Ottawa, and with the holidays fast approaching, the Bank of Canada has cut interest rates for a fifth consecutive time. Today we're going to take a closer look at the Ottawa housing market for the month of November. In this video, we'll discuss all the latest news and stats, including home sales, selling prices, and the impact that the recent rate cuts are having and will continue to have on the housing market. If you're buying, selling, or just keeping an eye on where things stand, there's a lot to take in. Before we get started, you might be wondering about interest rates. On December 11th, the Bank of Canada announced its second straight 50 basis point cut, which brings the key interest rate down to 3.25%. The move comes amidst stabilizing inflation, increasing unemployment, and a weaker than expected economic growth in the third quarter. With rates dropping, it'll be interesting to see how this impacts home sales in the coming weeks. Will it spark a flurry of sales activity in the weeks ahead, or will it cause a turbocharged spring market next year? It might be a little bit of both. Now, let's get into the numbers for November, and we'll kick things off with home sales. A total of 1,059 homes were sold during the month, according to the Ottawa Real Estate Board. And this is a 46% increase over last year during the same period, and down a bit from the 1,179 sales that we saw a month ago in October. Through the first 11 months in the year, cumulative unit sales in 2024 are up nearly 12% compared to last year. There have also been more than 12,800 sales from January through November, and that's a sign that sales activity remained active despite high interest rates throughout most of the year. By the way, my name is Sernoskie, and I'm a real estate agent here in Ottawa. And if you want to stay informed about our market and learn a ton of helpful tips about buying or selling, smash that subscribe button. It helps me out a ton. Now let's shift gears and talk about inventory, another critical piece of the puzzle. In November, we saw 1,352 new residential listings, and that's a 7.3% decrease from last year. While new listings were slightly below the 5-year average, the number of active residential listings skyrocketed to 4,036 units, up 38.2% from last year. In fact, active listings were 72.8% above the 5-year average. That's a significant inventory buildup. But what does this mean for buyers and sellers? More active listings can create opportunities for buyers by increasing choice and potentially softening competition. However, for sellers, this could mean adjusting expectations and being strategic with pricing and marketing. The number of months of inventory, and that's a measure of how long it would take to sell current listings at the current sales pace, was 3.8 months in November, slightly down from 4 months the year before. This indicates that we're still in a balanced market, though certain property types and neighborhoods may feel different dynamics. So what does this tell us? According to the Ottawa Real Estate Board President Curtis Fillier, the Ottawa housing market is on the mend after a slowdown in 2023. Buyers have been cautiously re-entering the market, watching interest rates dip and waiting to see how new mortgage rules, like the extended amortization periods and higher default insurance caps, will impact people's purchasing power. Fillier said, quote, "Ottawa is making headway on its road to recovery, but both buyers and sellers are treading carefully. Buyers are looking for the right opportunity, and some sellers are holding off until typically the busier spring season." For buyers, this is a market full of opportunities, but it's also one that requires careful planning. Interest rates are gradually easing, and new mortgage rules coming into effect this month could expand your purchasing power. And if you've been on the sidelines, now's the time to reevaluate your options and take advantage of these changes. For sellers, understanding the market is key. While prices are holding steady, we're in a period of increased inventory, which means buyers have more choices. Now for housing prices. The overall MLS Home Price Index benchmark price in November was $636,700, and that's up 1.5% from last year. For single-family homes, the benchmark price was $722,400, marking a solid 2.1% increase. Townhouses and row units saw a modest 0.3% increase, reaching $491,500. Condos, however, experienced a 3.7% drop, with the benchmark price settling at about $406,200. One key metric to examine closely is the sales to new listings ratio. With 1,059 sales in November and 1,352 new listings added, our sales to new listings ratio is currently at around 78%. That's up significantly from October's 56% figure, and it puts us firmly in a seller's market. As the holidays approach, sales activity will certainly begin to slow down. So there you have it. That's your November market update for Ottawa. The real estate landscape in Ottawa is evolving, and it'll likely change more as we get into the new year. And if you're considering buying or selling, or even if you're just watching the market, staying informed is key, and we're here to help.